With headlines screaming about million-dollar homes, million-dollar suburbs, soaring unaffordable house prices, it's easy to feel like the days of buying an investment property for $650,000 or less are long gone. But here's the thing, that number still has legs. The key is knowing where to look, what to buy, and how to make your money work smarter. Hello everyone, I'm Kate Hill, and if you are ready to build real wealth through smart, no-nonsense property decisions, then you are absolutely in the right place. So let's dive right on into it. Can you still buy an investment property in Australia for $650,000? By the end of the video, you will know where that might be so that you can make smarter property investment decisions with confidence. $650,000 might not buy you a blue chip terrace house in Sydney's inner west with a shocking yield, mind you, but it can absolutely still secure a strong performing investment property. You're not aiming for flash, you are aiming for function and performance, yield, capital growth, rentability, and low holding costs. If you are strategic, then $650,000 can be a gateway to financial freedom, not a limitation. Plenty of regional hubs and outer metro growth corridors still offer solid value in this price range. We're talking about places with low vacancy rates, good infrastructure pipelines, and strong rental demand. So think Southeast Queensland, parts of Adelaide, outer Perth, select regional centres across Victoria, New South Wales even. These aren't speculative hotspots, they are locations backed by population growth, jobs, schools, transport links, consistent investor and owner-occupier activity. The key is to follow the fundamentals always and not the media noise. If you are finding this helpful, then please do hit subscribe. I share weekly strategies and insights to help you grow long-term wealth through smart property investing. Let's carry on. Depending on the location, of course, $650,000 can get you into a brand new house, a modern townhouse, or a well-positioned existing home. In some areas, duplexes or a really well-positioned unit can be a good and desirable option. You might be thinking, is that shiny new kitchen important? Well, the right property should have strong land content, good yield potential, tenant appeal, minimal maintenance. Remember that you are not going to live in it. The kitchen needs to be usable, good order, but you are building a portfolio that grows over time, not an interior design double spread feature. Now, yes, you may need to look outside the inner city. You may trade a bigger house for a better location or vice versa. And the goal is balance. And remember what I've said before about the bigger house. Much of Australia doesn't want the bigger house anymore. Our family size is shrinking. Ask yourself, does the property have all those must-haves to attract long-term tenants and future owner-occupiers in that area? Is it positioned in an area with future growth drivers? Is the cash flow manageable for you in today's interest rates? The best $650,000 properties aren't necessarily the prettiest. They're the most strategic. Think like an investor, not a homeowner. It's never going to be perfect. Get it as right as you can. Good enough is better than perfect. How do you make it work for you? To maximize your $650,000, you need a strategy that includes selecting the right suburb, of course, running the cash flows, understanding rental yields, and anticipating growth trends. An expert buyer's agent can help you avoid common mistakes like overpaying, underestimating repairs, or choosing areas with poor rental demand. With the right plan, $650,000 or less can set the foundation for your whole portfolio. It's not just about buying cheap, it is about buying smart. So in spite of rising prices, $650,000 is still a powerful starting point for investors who are willing to think strategically. There are strong, steady performing locations right now that tick all those boxes. You just need to know where to look. So if you're serious about building wealth through property, that price point can still open the right doors. Thank you so much for watching, everybody. If you are serious about building real wealth through smart and well-researched property decisions, please stick around on this channel. There is a lot here to support your journey, and I will see you in the next video. Bye.